Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of February 5th through February 9th, where we'll try to help you learn how to make money trading in February. So thank you again for joining us for our part one of our weekly trading game plan for February 5th through February 9th. So let's get started. So here's our notes, Google document with our notes for part one of our weekly trading game plan for the trading week of February 5th through February 9th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our notes documents contain links to bonus videos, links to the tools and resources we use to do our market analysis, our trading strategies, trade ideas. We store all of our Google documents with our weekly trading game plan notes in a publicly accessible Google Drive folder. So you can refer back to the notes for this week as well as our notes from previous weeks, and you can find a direct link to that Google Drive folder also in the description box below. Welcome to Ricky Kahn. Thank you for joining us. Hope you are doing well. So first we'll take a look at how the markets ended up on Friday. We'll go to the main page of FinViz. See, all the indices had a pretty exuberant run on Friday, had a little bit of a downturn in the Dow and the S&P towards the end of the day. It was definitely a magnificent 7 or Super 6 type day. You can see the big run in Meta, in Amazon, Nvidia, Microsoft, Apple down a little bit, Tesla down a little bit. But again, exuberant run in the magnificent 7 after particularly the earnings in Meta. So we see we had, a small gain in the Dow, 0.35%, 1.7% exuberant run in the NASDAQ, over 1% the S&P. Again, in my humble opinion, all driven by the Magnificent 7 or Super 6, whatever you want to call it nowadays. You can see we only had 35% advancing, 60% declining. We had 77% new highs, 23% new lows, 60% above their 50-day, 40% below, and 64% above their 200-day, 36% below. So even though we had these exuberant runs, you can see there was a little bit of a bearish tone towards the end of the day. Welcome, Alan Krantz, Walter Lyons. Thank you all for joining us in the live chat today. Hope you all are doing well. So some of the news, we still got the Russia-Ukraine going on. Looks like they hit an oil refinery, so that might have some impact on oil prices, but we'll talk about some of the other global events occurring that are impacting the oil prices as well. Declining inflation, increasing real wages, China Lunar New Year. So again, the Chinese markets will be closed soon for the Chinese Lunar New Year. And Dow S&P set fresh record highs after strong hiring data, which is a little bit ironic. But again, I think that's just a Mag 7 exuberant run. S&P closes at a record. Rises for the fourth consecutive week on strong tech earnings. So again, even though we just heard that news with Russia-Ukraine oil, oil did break down primarily on talks of a ceasefire in the Middle East, but we also have these airstrikes going on in Iraq and Syria. So again, volatility in the oil market due to global events. We saw natural gas broke down near 2, bounced up a little bit. Again, we'll see this all in the futures. Gold's kind of hovering around 2050 right now. And we can see the futures on all the indices are pointing up right now. DXY, the dollar, had popped up over 104. I'm not sure exactly. It looks like it's still pretty strong, around 104. So again, on the various economic data we had, we did get a decline in Treasury yields pretty dramatically after the Fed interest rate decision. They had dropped down below 4% pretty dramatically. And then we got the jobs data on Friday. They popped back up. So we've got the 10-year again back up over 4%, 30-year 4.2, 5-year just hovering below 4%. So pretty dramatic swings in the bond yields and bond prices again this week as well. Welcome, Easy Mike, Sydney Osborne. Hope everyone is doing well today. Thank you for joining us. So we'll also look at these more detailed charts using our major indices and our technology component screeners, which again, as a reminder, you can find these also in the screener sheet in both of our ETFs Google Sheet and our Watchlist Google Sheet. So again, quick and easy way to monitor the various subcomponents, the major indices and the technology components. So if we bring that one up, we can see very easily, all the major indices, the Dow, S&P made new all-time highs. Qs, testing their all-time high, testing the upper trend line of their upward channel. So again, some resistance at that level, whereas the Dow and S&P, clearly broken out, blue skies ahead. Small caps not, participating as much. Again, the rate cut decision, the lack of a near-term future rate cut decision had a negative impact on the Russell. So again, you can see, although Dow, S&P are making new all-time highs, the Russell, the small caps, are not really participating in that rally. We look at the technology components. So again, the major technology components of primarily the NASDAQ, we see again the FANGs, this indication of the Mag 7, having that exuberant run. So it broke out after having previously gapped down on that lack of a Fed interest rate cut decision. And then with those earnings, the Meta earnings, the Amazon earnings, Microsoft earnings, we had that exuberant breakout. So again, my humble opinion. We'll talk more about some of this tomorrow. Again, just a reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and hopefully some entertainment purposes only. But again, I wouldn't be surprised to see some profit taking, some retracement correction in the FANGs, the Magnificent Seven. We see the semiconductors had been declining, bounced back up. Again, we saw that exuberant run in NVIDIA, recovery in AMD. See the TQQQ, the NASDAQ, is sitting at the upper trend line of its upper channel. So again, some resistance there. And the broader technology index, ETF, TECL, again, we see that, exuberant recovery where it had been declining. You can see biotechs, again, not really participating, just kind of barcoding, chopping around, getting closer to the moving averages. So those will probably provide some level of support. But again, not really a up or down trend, just kind of barcoding, chopping around in biotechs. And again, we see ARK-K, the ARK Innovation ETF, again, very similarly, just kind of consolidating, going sideways, chopping about. So again, not really participating in the exuberant run we got from the Mag 7. So I hope that all helps. And again, we'll look at how we're playing these various technology components more so tomorrow. So if we look at the groups and the sectors in FinBiz, again, we see on Friday, exuberant run in technology, communication services, again, mostly Mag 7 driven. We've got some, run in the Dow, the industrials, also got some consumer cyclicals. Some of those are also related to the Mag 7. We see the weakest segments, real estate, utilities, again, your interest rate sensitive sectors, as we had bond yields pop back up over 4%. We saw a decline in basic materials. Also, energy for Friday was down. Healthcare down a little bit. Defensive, again, this was more risk on with the Mag 7. For the week, again, we see consumer defenses were strong, cyclicals, healthcare, industrials, technology, not so much for the overall week. The weakest, energy, again, we saw oil had popped up over 75, looked like it was headed to 80. Then we got the news of a possible ceasefire in the Middle East, and it declined back down. Now I think it's in 72 or so. So again, a lot of volatility in oil. Again, real estate sensitive to the interest rates for the month, primarily of January. It was, again, technology, communication services strong, industrial strong. Financials had made a recovery, and we'll talk a little bit about the bank collapse. I think Alan Krantz was mentioning the NY, the New York Community Bank issues. See, for the month, again, utilities, energy, real estate, basic materials were the decliners. Look at the industries, so internet retail, probably mostly Amazon, semiconductors, mostly NVIDIA, got some industrials, software, again, technology in general. Worst performing, again, basic materials, gold, silver declined. The REITs, real estate sensitive, again, solar, interest rate sensitive. Utilities, biotech. We see, for the week, uranium was strong. We had some retracement in uranium on Friday, but again, uranium remains very strong. Agricultural inputs had somewhat of a recovery this week. Steel. For the week, again, oil and gas generally weak, retails generally, or REITs generally weak. For the month, again, we see semiconductors strong, uranium strong. And again, solar, silver, gold, REITs, oil and gas generally weak for the month. So now we'll talk about the economic data that we got for this week, and we'll look at what economic data we've got coming up. We'll talk about some of my notes from the Fed interest rate decision and speculate on what that may mean going forward. Let me grab a quick drink and we'll go through that economic data. Okay, just a quick reminder, as quickly as possible when this economic data comes out, we have a Surf the Markets channel in our Discord. Our Discord's free to join. You can find a direct link to a free invite to our Discord in the description box below. And again, as quickly as possible as this economic data comes out, I'll try to post it in the Surf the Markets channel in our Discord. So we also have all kinds of channels on different trading of different assets, different trading styles. So we'd encourage you and invite you to join us in our Discord. Again, get up-to-date economic data as well as help from your fellow BeachBum traders. So again, not much Monday, Tuesday. Then, of course, we had the big Fed interest rate decision on Wednesday. We talked about this last week. We didn't expect any change. We got no change. That wasn't really terribly interesting. What was interesting is their statement and then the comments by Jay Powell. So again, not much of a surprise that there was no change in interest rates. They stay steady at 5.5%. Here's some quotes that Walter Bloomberg posted out of the statement. The FOMC does not expect to reduce rates until it has greater confidence inflation moving towards 2%. And we heard in the discussion, many people asked Powell, what would give them that greater confidence. And essentially, they said they want to see more data. They want to see consistency in the data. FOMC judges risk to achieving employment inflation goals moving into better balance. Any adjustments to rates will be based on incoming data, evolving outlook, balance of risk. Again, as we speculated last week, we expect them to reiterate their data dependence. So, again, they're going to keep reiterating they want to see what the data says. They're not going to make any decisions or speculate until they see a lot more data. Highly attentive to inflation risks. Economic outlook is uncertain. Economic activity expanding at solid pace. So again, we saw GDP was positive, better than expected for fourth quarter. So no real cracks in the economy right now, and job gains have moderated. Well, they said this before. The jobs data came out on Friday, and the job market remains strong. So again, they don't have to worry about unemployment. Here's some of the comments that I picked out of Powell's press conference. Inflation's still too high, so again, their focus is on 2%, getting down to 2% inflation. Labor market remains tight, so again, no issues of unemployment. Unemployment remains low. Labor demand still exceeds supply, so again, they're not this is in an inflationary wage price spiral type issue. They want to see the labor market get more balance, and they don't have to worry about high unemployment. He did say, rates at the peak. So there's no expectation rates are going to go up anytime soon. And he said, dialing back policy rates sometime this year. So they do expect a cut. They stated they would cut, 3 times this year. And the market kept pricing in 5 or 6. And the market, as we saw last week, the market was pricing in a rate cut as early as March. And we knew this question was coming. And he pretty clearly stated that they're not going to cut in March. He said March cut is unlikely, not the base case. Essentially, they're not going to cut in March. Now, I guess the market is pricing the first rate cut in for May. Again, in my humble opinion, not financial advice, but I think May is overly optimistic. I don't think we're going to get a rate cut until this summer, June, July. Again, that's my opinion. And again, I would like to see what the data says as well. But again, they're pricing in a May cut right now, and I think that's overly optimistic. So we would expect a similar correction. We saw a pretty dramatic drop in the markets when he answered that question that, March is pretty much off the table. Markets all dropped pretty precipitously and then turned around and bounced back when we got the Magnificent Seven earnings. So this didn't really spook the markets long term. We saw the VIX, I think it popped up to about 14 or so, and then very quickly settled back down below 14. Welcome, The Crow. Thank you for joining us. Hope you're doing well. So Thursday and Friday, we got some kind of mixed jobs data. It was kind of interesting. We did have an OPEC meeting. OPEC's not changing anything right now. Then we got job cuts, which were higher than expected. We got continuing claims higher than expected, and initial claims higher than expected. So on Thursday, we got data that said, unemployment might be increasing. Again, this is January data. We also got productivity, nice increase, and unit costs were significantly lower than expected. So on Thursday, we got data that said, well, maybe the jobs market is cooling off a little bit. Then on Friday, we got the non-farm payrolls data, and the non-farm payrolls was much higher, almost double what was expected. Also, we got some wage data that was much higher than expected. Where's the hourly earnings? Much higher than expected. Average hourly earnings about double expected. So we got, very strong unemployment data on Friday. Participation rate steady. U6 unemployment steady at about 7%. Unemployment rate actually, well, it was below expectations, but it steady for the month. So we had a jobs report blowout. U.S. economy adds, all these jobs. And of course, that normally would indicate that the Fed maybe needs to cut to avoid a wage price spiral. So, but this jobs cut data, I think we'll see this start to come in the near future. Um, I think the labor market is relatively stable, and we just we saw a pop in employment in January. So again, I think it's strong, stable. I think this will settle back down, but again, no reason the Fed needs to cut anytime soon. Employment market is strong, so again, I think the market pricing in a May cut is overly optimistic. So we'll look at other economic data from last week in investing.com, and then we'll see what data we have upcoming in the next week. So again, got bond auctions, pretty okay. Housing prices pretty stable, same as previous. So again, JOLTS data was higher than expected, so we've got still, more than expected job openings, so that goes with the strong labor market. Crude oil stock dropped significantly more than expected, so that normally would pump prices up, and we did see prices go up between 75 and 80 and then drop back down to below 75. Mortgage rates steady. We talked about the ADP data. PMI less than expected, so manufacturing again continues to slow. Talked about the FOMC, their decision. Talked about Challenger job cuts and the continuing claims, initial claims. ISM, a little better than expected. So that manufacturing indicator was positive. Natural gas storage dropped, but less than expected. And yet the prices continued to decline. Talked about the job payroll data. Okay, also Michigan sentiment we got on Friday. The 5-year inflation still higher than expected. 1 year steady at 2.9. Overall expectations were more positive than expected. Sentiment more positive than expected. Current conditions a little below expectation. Baker Hughes rig count. So the oil rig count steady. Total rig count a slight decline. So again, looks like that production, U.S. production, has pretty much stabilized. Let's look at the economic data for next week. So we got some payroll on Monday, ISM, non-manufacturing on Monday. And now we've got Fed officials starting to talk again, so we'll hear their comments, probably a lot of speculation of when are the cuts coming. I'm sure that'll be the question on everybody's mind. Got mortgages, typical oil, natural gas reporting. Again, all the Fed officials starting to talk. We get jobs data again on Thursday, so we'll see if that will get any change there. And not much else. So again, we're still in the heart of earnings season. So we've still got, some significant companies reporting earnings. You can see the full list of earnings in the earnings calendar on investing.com. McDonald's, Caterpillar, Sony. So some industrials, some retail. So again, I'll let you look through, Estee Lauder. So semiconductors. I don't believe. I think NVIDIA reports on the 21st. I think we've got most of the Mag 7 out. So the largest movers in the indices are out, but again, it's important to see who's reporting, what sector are they reporting, and what kind of sentiment plays might they have. Again, we'd recommend you listen to our video on how to make money trading when earnings matter. As you can see, earnings definitely matter. If they miss, they get punished. And even if they beat, the question is their forward guidance. So we would highly recommend, you keep an eye on how that might impact your trading decisions, your portfolio, etc. So let me grab a drink a second, and we'll jump over to the market screen in Webull. Just a quick reminder, if you're not already using Webull, you can still get 75 free fractional shares of stock by opening an account, depositing up to or 25K or more. Under 25K, you get 20 fractional shares of stock, each worth $3,000 to $3,000. So if you're not already using Webull, you can see we use Webull for our market analysis, our due diligence, the majority of our trading. We highly recommend it. And if you'd use our affiliate link in the description box below, you can get your free fractional shares of stock and also help support our BeachBum trading community, which we greatly appreciate. Again, I'm on the online browser version of Webull. I'm using the market screen here. We could see, although we had those new all-time highs in the Dow and S&P, participation is pretty thin. So we only had, we had these outliers, Magnificent Seven, Meta, etc., having the big runs, but the majority had very small advances. We actually had more decliners than advancers. So again, even though the indices are making new all-time highs, the participation again was concentrated in the Magnificent Seven. As we've seen, typical graph, again, even though we saw that big run in the techs, we had pretty much an outflow out of the NASDAQ on Friday. We get this inflow into the NYSE. This seems to be the recent trend on Fridays. Again, you can see the near-term earnings calendar here in the calendar section of the market screen in Webull, so you can see who's reporting. We've got McDonald's, NXP, CAT, etc. Reporting soon, so you can see when the near-term earnings calendar is in the market screen in Webull. Looks like they made some changes here. This is a new feature. Looks like they've got a heat map now. I had not seen this previously. So we'll explore that in more detail in the near future, but hopefully that will help. We see that big run in Meta, over 20%, NVIDIA, 5%, Amazon, almost 8%. So again, the mega cap techs are contributing mostly to the upsurge in the indices. So I want to look at the best performing industries for the week. I'll pop this one out. So again, strength of uranium we talked about, retail somewhat positive, healthcare providers somewhat positive, a little bit in construction, auto, transport infrastructure, healthcare, home building. So again, small increases in the sectors. Go look at the ETFs. So we can see up on the Qs, up on the Qs, up on the Dow, long on the S&P, again up on the Qs, up on NASDAQ. Small caps down, TZA I believe is the short, yep, and there's the SRTY, another short on small caps. Industry-wide, industrials, again we saw the Dow breakout. Financial services had a recovery. Utilities negative, energy, real estate negative, healthcare mostly negative. Technology again strongest. Consumer cyclical, little positive, defensive negative. Commodities, natural gas bouncing a little bit, carbon credits, sugar. We'll look at all the ETFs in our ETF Google Sheet in a few minutes. Okay, let's look at the futures in FinBiz. Grab a quick drink. Check the chat. Easy Mike pointing out several ETFs that had outflows this week. Soxel, surprising outflow, although we did see it recover some. So here's the futures. Again, we see the Dow, S&P made new all-time highs. NASDAQ, very close to its all-time high. See that dip on Wednesday when Powell, just reiterated what we thought, which is they're not going to cut in March. And they're not going to tell you exactly when they're going to cut. It's going to depend on the data. Again, we see the Russell pretty flat, not really participating in the run. Nikkei's been strong, has a slight dip. Looks like it's trending back up. Europe looks like it topped, rolled over, and bounced back up. Similarly with the DAX, so everything running near their highs. Again, we saw a little bit of a pop in the VIX and then, quickly retrace back down. We've got some, global events that might cause a little bit of volatility, but again, not much sustained fear in the markets. Again, we saw oil made that run up towards 80, didn't quite reach that 80 resistance point, and then declined again as we got that ceasefire potential news, which has really not been confirmed. So now oil's downtrending pretty rapidly. We'll see if it tests or breaks down through 70, or again if the airstrikes, etc., in the Middle East cause a rebound. And natural gas, really declines, sitting right around 2. If natural gas does break down below 2, as we'll see in the ETF's Google Sheet, we might look at adding a scalping position using Boyle. So again, under 2, I think the 52-week low on natural gas was about 194, and I believe I have a Thinkorswim price alert set on that. So you might see that pop up in our Discord in the Thinkorswim price alerts. See gold pretty steady at 2050, so it did pop back up, and then it's kind of hovering around 2050. Silver did break down below 23. It's kind of oscillating around that 23 level. Platinum and both a lot of the basic materials, dollar-dependent commodities declined when we had that strengthening in the dollar on, the Fed's not going to cut. A lot of the other agricultural ran up, corn, wheat kind of down. And again, we saw, bonds were running up, yields were declining, and then we got, okay, they're not going to cut. And we got that strong employment data, and then bond prices bounced back up. So where bond yields bounced back up to 4%. So bond prices declined pretty steeply on that employment data. And again, we got that big spike in the U.S. dollar up to over 104 when we got that strong employment data. So I hope that all helps. Yeah, Easy Mike's confirming, although there were rumors of a ceasefire, it has not been confirmed. So again, speculation in that area will probably cause volatility in the oil prices. Also, with the airstrikes ongoing throughout this weekend, again, that might cause some concern over oil supply coming out of the Middle East. We'll see how that reacts. And also, Easy Mike's pointing out Zim, which is a shipper, one of these dry bulk shippers. Again, the ceasefire in the Middle East would be a positive, but would be a negative for the shippers who were charging higher prices, having to go around the Suez Canal. So the shippers that had run up on some of the news declined. So now we'll look at our ETFs Google Sheet. So if anybody has a particular topic, category, commodity, etc., you'd like to look at in our ETFs Google Sheet, you can throw that up in the chat. We do have quite a few additions and updates that I'd like to go through. So just a quick reminder, you can get 24/7 access to our ETFs Google Sheet, as well as our dividend payers Google Sheet and our puts ROIC, which we use for trading, generating income from options by joining our Patreon at the all access or VIP level. So as you can see, when we identify an opportunity in a particular category, that we can then go to our ETFs Google Sheet and identify the ETFs that we can play that idea long or short in our ETF Google Sheet. So again, I've got a number of additions. One of the things I did add in our screeners sheet as an additional tool to monitor the progress of the markets is I added a link to the Sector Spiders sector tracker. So people have asked different ways to track sector rotation. So this is one tool you can use to track sector rotation during the day, at least within the S&P. So again, you can see the performance of the sectors in the Sector Spider tracker. Also, again, you can use the FinBiz groups tab, and we have other mechanisms as well. But again, just a quick additional tool that you can use in our ETFs Google Sheet is the Sector Spiders tracker, and you can see we also have the links to that major indices and the technology components screeners in FinBiz. You can also find a link to that Sector Spiders tracker on our homepage under the links section, under the trading tools. So again, we keep all the trading tools we frequently use in the links section of our homepage, beachbumtrading.com, bum without the U. So you can always find that there as well. Okay, let me grab a quick drink and let's talk about some additions that we've identified this week. First one is a pair of ETFs, Japan-related ETFs that the Crow pointed out to us. So thank you again, the Crow, for pointing out these Japan-related ETFs to us. We'll take a look at each of these in the research tab. So again, the first one is called a hedged ETF, and the second one is just a Japan ETF. So they're FLJH and FLJP. So again, we've added these on the research tab, and we'll look at the risk-reward profiles of both of those a second. Also, this FLJH, as you'll see, pays a nice dividend and looks attractive as a dividend payer. So we've also added this to our dividend payers Google Sheet as an option for generating dividends trading Japan. So we'll look at those two a second. So again, they're in the research tab of our ETFs. Right now they're at the bottom. I'll sort them up in the near future. So here's those two Japan-related ETFs. So here's FLJH, FLJP, so the hedged version and just the base version. So you can see, 52-week risk reward. The FLJH has a little bit better, 1.34 versus 1.21 for just the FLJP. Also, bottom to top has a better risk reward, not quite the 2, so it doesn't, have the risk reward that I'd like for potentially a swing trade. You can see right now, this one's risk reward is it's a little better reward than risk, but not significant. You can see the composites of each of those ETFs via the links to their profiles in the ETF database. So you can see what holdings they have, how they're comprised. So you can see this is a market cap weighted. See major holdings: Toyota, Sony, Mitsubishi. Compare that to FLJP. Again, it's also market cap weighted. And its constituents are pretty much the same. So again, it's just their strategy, the hedging strategy, and FLJH seems to be a little bit preferable in terms of risk-reward profile, in terms of performance. And also, as I mentioned, and we'll look at FLJH tomorrow in terms of their dividend payment information. So it's got an attractive dividend. And again, we can look at that in more detail tomorrow, but just to point that out. So it pays a nominal 23.4% dividend. You can see the yearly performance has been positive 11. So you can see it bounced off on their ex-dividend, had a pretty significant drop on their ex-dividend date. It looks like it's semi-annually, so every 6 months, but then has recovered pretty nicely. So again, thank you to the Crow for pointing those out. This one looks very interesting in terms of a dividend payer, both in terms of their nominal dividend and their potential price appreciation. So if anyone has experience with those, we'd love to hear your comments, your experience with either FLJH or FLJP. Please put it in the comments in our Discord, etc. So another whole block of new ETFs that the Crow pointed out to us, and we did some research on the T-Rex site, is these are a whole series of leveraged ETFs on individual stocks. So you can trade these individual stocks using an ETF with 2x leverage, either long or short in many cases. So where you can't short in a retirement account, you can use these ETFs as a way to short individual stocks. So we've captured and added all of these to our research tab in our ETFs Google Sheet. So you can see there's a long and short for Tesla, a long and short for NVIDIA. There's only a long for Apple, There's a long for Alphabet, Google, and a long for Microsoft. So again, we plug those all into our research tab in our ETF's Google Sheet. So you can see the risk reward profile of all of these. As you can see, APPX currently does not show up in FinViz or in Google Finance, so we're not getting any data right now on those. So as soon as they appear in Google Finance, those will automatically fill in. And we can see all of these are relatively new. So if I just bring up TSLT, so we can see, they've only got a couple months of history. So we only have the, current 52-week. Most of them are optionable as well. So you could also use a covered call strategy on a position if you wanted to. Also, again, you can see the risk reward profile of each of these. They look pretty attractive. They're all over 2. For all of these different T-Rex leveraged ETFs. Again, the lack of long-term history. I'd like to watch these. We can watch them in the research tab in our ETFs Google Sheet, see how they perform longer term. And again, you can track their performance and risk reward profiles here in the research tab in our ETFs Google Sheet. But again, another way that you can, long or short with leverage these individual stocks. So I hope that helps. I'd also love to hear y'all's feedback on, would you like those eventually, those single stock ETFs to appear in our main ETF Google Sheet, or would you like potentially another single stock sheet within our Google Sheets? I mean, they are ETFs, so technically they qualify, and we do have other NVIDIA and Tesla ETFs in our Google Sheet already, so you can compare that T-Rex ETFs to the ones the existing ones we have in our main ETF Google Sheet, and compare their performance. So again, I hope that helps. So again, there's the other Tesla ETFs we currently have. So you can compare the risk reward profiles and performance of those to the T-Rex ETFs, easily between the tabs in our Google Sheet. So thank you again, The Crow, for pointing those out. We'll keep an eye on those, see if those are a better way to trade these individual stocks, long or short, as we get more history on those T-Rex leveraged ETFs. Last category of additions I wanted to point out is 2 quote new energy-related ETFs that were talked about on a Bloomberg ETF IQ show. This coal one, I guess they resurrected it. I guess there used to be a coal ETF, and they've now resurrected that, which is nice because we didn't previously have a ETF to trade coal. So we'll look at that one. Also, there's a new one. I know Easy Mike has been mentioning this one as well. Is Nukes, NUKZ. So it's a nuclear renaissance ETF. So we'll look at that as well. And then you can compare that to the existing ETFs we have on uranium, which are URA, URNJ, URNM. So we can see if Nukes is a better or comparable ETF to the existing ones we have on uranium. So again, I've added both of those to our research tab. So here's coal. So you can see overall, it doesn't really have a whole lot of, these are, again, relatively new, so we don't have a lot of history on them. So all we have is their current 52 weeks. So again, you can see this is not optionable. Again, very new. So we'll leave them in the research tab, see how they perform. You can see the constituents of the coal ETF. How is it comprised? So it's market cap, vanilla. Look at their holdings. So again, it's so new they don't have any holdings data yet. So as that comes out, we can see what exactly that's holding. look at the nukes. And so here's uranium, nukes. Again, don't have a lot of history. It's relatively new. See if we've got holdings on that. So market cap weighted, nuclear energy. Again, these are just released, so we don't even know, we don't have the holdings data on them. Again, you can see their definitions and their profile, their philosophy, either in their ETF database or via their profile in FinViz. Again, not much data yet. They're all too new, so we'll keep an eye on those in our research tab of our ETF Google Sheet. Watch their performance. Again, it would be nice to have a coal ETF, as we currently only have a couple individual stocks. So currently for coal, I think we have BTU and METC, NC, and BTU. So those currently are actually only individual stocks. So it'll be nice to have an actual ETF for coal. And then for uranium, as I mentioned, we have URA, URNJ, which is uranium miners, URNM. So you can see right now with the data that we have, these have preferable risk-reward profiles. So we'll see how that nukes ETF performs comparable to URA, URNM, URNJ. So again, I hope that helps. Okay, if anyone else has any other ETFs you want to look at, I can look at those very quickly in our ETF Google Sheet, but I do want to get to our strategies, our theme for this week. And we talked about BOIL. If we see natural gas drop below 2, I'd be interested in possibly a scalping position in natural gas using BOIL. See, it's close to its 52-week low, not quite there right now. Talked about oil, so you can short oil with drip, long with gush, or short with SCO, long with UCO. Although if we do get oil below 70 again, I'd be looking at a position in USOI, which is again a monthly dividend payer on oil. So anytime oil drops below 70, we're looking at a long in USOI. Alan Krantz says the Sprott uranium ETF is the best. I'd love to hear your reasons why you prefer that one. Just it'd be interesting to hear why you like that one best. We talked about all the technology components, and we'll talk about those particular ETFs we're watching to play those more tomorrow. So, and we talked about the individual stock ETFs we've got on Tesla, NVIDIA, etc. So, again, if anyone in the chat has another one you want to look at, let me know. Otherwise, we'll continue. Let me grab a drink, and we'll get into our strategies for this week. Okay, our theme for this week is how to make money trading in February. So we'll talk about how February typically performs, and then we'll talk about potential opportunities for how to make money trading in February. So we'll go to this chart in investing.com that we look at in terms of their performance of the various months comparatively. They updated their chart in investing.com, or Investopedia, I'm sorry. They've got a new chart layout. So now they're showing their performance. They've got different bars for the performance since 1950, past 20 years, past 10 years, and the past 5 years, whereas we used to only have one bar for the particular month. Let me see if I can blow this up, and that's a little bit larger so we can see it a little bit clearer. So we can see now for the most recent 5 years, January is positive, although now for the past 5 years, January or February is actually negative. In the previous charts we've looked at with single bars, February was down from January, but was slightly positive. So we see, past 10 years or so, slightly positive overall, slightly positive, but over the past 5 years, it's been negative. And again, overall, it's a decline from January. And then you can see we get a bounce back in March, although recently you can see in March, the bounce back has been less than average for since 1950. And then we get that run up into April and then a drop off into May. So again, we're kind of for February, we're expecting long term, on average, a small positivity, but in the past 5 years, it's been negative. So since we've had that exuberant run, particularly in technology, going into February, I wouldn't be surprised to see some profit taking, some retracement, some correction in February, and then again a rebound going into March. So again, we want to be prepared with the markets, running exuberant at all-time highs. Protect your profits, protect your portfolio, be prepared for a potential correction, and having February be a potential negative month. So that's, the past 5 years it's been negative, and even in the best years, it's been very small positivity. So again, I hope that helps. We also have a series of other videos that you can listen to on how to make money trading in February. We did a previous short video, has similar information. Also, how do the markets typically perform in February, and what are typically the best performing sectors and industries in February. So again, you can hear that information via those individual videos, via the links both in the notes and in our BeachBum Trading YouTube channel. We also, as we looked at, how to make money trading in the winter. So again, January, February, early March, you can hear the themes and how the stock markets typically perform in the winter and the best performing sectors and industries for the winter. Another theme for February, obviously, is Valentine's Day. So some stocks that will benefit from that are your dating sites, your Match.com, etc., your gifting sites, your flowers, 1-800-Flowers, your candy companies, Hershey, etc. So again, another major theme in February is obviously Valentine's Day. But those are probably already starting to run up into that, and then they'll probably have profit taking after that as well. So if anybody has any other last minute questions or comments, you can put those up in the chat. Tomorrow we will also look at our dividend payers and our dividend payers Google sheet, and we'll also talk about several option strategies for generating income. So again, we'll talk about that more tomorrow. I just wanted to pose this question and start some discussion on a question that the yacht insurance guy asked in a comment on our video on when will the Fed start cutting rates. So you can see that comment under that video. He asked a good question. If the Fed starts cutting rates, what areas do you think have the potential to make money? So I've just started to think about and gather some of our previous videos, our previous notes on essentially interest rate hikes, which would be the inverse of those, would benefit from interest rate cuts. So we've done some previous videos on the impact of how to make money when interest rates rise. So now we want to talk about, how do we make money when interest rates fall or are cut. So I put the links from start of some of our previous videos on the topic of interest rates, and I'm going to again continue to collect our notes to respond to that, and that probably will be a theme of a future part 1 video is, how do we make money when interest rates are cut, or when the Fed cuts interest rates. So if you all have some thoughts, some input into that discussion, that would be great. Please put them in the comments below in our Discord. Again, let's start that discussion. We've got some time since we know they're not going to cut in March. I don't think they're going to cut until, June or June, July, summertime, I think, in my opinion, will be the first cut. So we've got some time to prepare. And some of these things, they probably ran up already thinking the Fed was going to cut rates in March. We'll probably see some drop in those sectors. So like utilities, we saw the drop. They will probably run up thinking they're going to get a March cut. Not going to happen. So we did see utilities were back down some. So that may be an opportunity again when they actually do cut. Utility stocks would benefit. They are sensitive to interest rates in general, so they went down when interest rates were hiked. They should benefit on some degree of interest rate cuts. So again, I'll try to gather more of our previous notes and discussions in this area, add your ideas, your thoughts, and we'll have that discussion on how do we make money when we get the interest rate cuts. So also, again, love your feedback on how we can improve our weekly trading game plans, our videos, our community, our tools, etc. So please put that in the comments to this video below in our Discord. Again, you can tag us. We're beachbumtrading.com. Looks like we've got some imposters to clean up. That's us, beachbumtrading.com. No other characters, no other no letters, numbers, hashes, etc. And we'll clean those others up. And you can always contact us via the social media links on our homepage. So we've got links to all our social media profiles on our homepage. So you can always contact us with your feedback in that fashion. So we hope that you like this content. We'd appreciate it if you would smash the like button on this video. Hopefully someday we'll get the YouTube algorithm to give us more love. But in the meantime, we would greatly appreciate it if you would directly share our content, our channel, with your fellow traders. Encourage them to join us in our Discord, the larger community we have, helping each other out, sharing trade ideas will benefit all of our BeachBum traders. So again, thank you all for joining us today on part 1 of our weekly trading game plan for the week of February 5th through February 9th. We'll hope you all come back 10 a.m. tomorrow, Sunday, February 4th, for part 2 of our weekly trading game plan for this week, where we'll be using all of this input data to select our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. Again, we'll also talk about our strategies for using dividend payers and various option strategies for generating income while we wait for our top swing trading stocks to set up. So thank you again to everyone that joined us in the chat and everyone that's watching this video. And we look forward to seeing you again tomorrow. Thank you and have a great day.